So I was in a conversation with a homeowner the other day, and a question came up that I wanted to address on video. Is your home equity going to be taxed? I've been seeing this question come up once in a while in the media as of late. Certain politicians or think tanks talking about taxing home wealth or home equity. But what does that actually mean? Is it actually likely to happen? And what should homeowners do about it? So in today's video, I'll cover what a home equity tax might actually look like, where this discussion stands in Canada right now, and why many of us probably feel like it's a pretty bad idea. And not just for current homeowners, but for new buyers and the housing market in general as well. So it seems that when people are talking about a home equity tax, they mean a lot of different things. Sometimes it takes the shape of a proposal to reduce or eliminate the principal residence exemption, the tax rule that allows you to sell your home free of any capital gains as long as it's your primary residence. Other times it's ideas for a surtax or tax bracket on homes that are above a certain dollar value, or even an annual tax on the increase in your home's value, your equity. So depending on the proposal, it might only affect the wealthiest homes in Canada. So for example, one proposal was for a surtax on homes in Canada over the value of $1 million. And that surtax could range anywhere from 0.02 to 1%. So that's just one potential example, but there are lots of others floating around out there. What's important to note is that these are just proposals right now. There are no laws on the books of any sort, at least not for now. It seems as though for now the federal government in Canada is studying a few of these proposals, and think tanks and advocacy groups have floated a few of these ideas. But as of right now, nothing has been formally enacted. So the big question is if this is likely to happen at all, and if so, when? Well, there are some signals to look at, but there's nothing definitive yet. Politically speaking, the idea of taxing home equity is extremely unpopular with homeowners, for obvious reasons. The principal residence exemption has long been considered a sort of sacred policy for many. That said, studies of questions of this nature have definitely drawn some government attention, especially in light of the affordability and housing issues that are facing a lot of Canadian major cities. But if something like this were to be introduced, it's pretty unlikely that it would just happen overnight. If it were to be introduced, it would likely start out with smaller pilot programs or apply only to higher value properties, at least in the beginning. Something like this could show up as election promises or part of budgetary discussions, but you'd likely see a lot of consultation first. In my view, depending on how the housing issues, especially in Vancouver and Toronto, go down, you might see a lot more talk of this as time moves forward. But I doubt you're going to see any major tax changes of this nature, at least in the short term. So if a home equity tax were to ever show up, it would have some serious implications for people who already own homes, especially for those who bought years ago and now have a lot of equity built up. First, something like this could drastically alter retirement plans for a lot of individuals. Many Canadians count on the fact that their home equity is a big part of their net worth, and eventually that built up equity backs up their retirement security. If you had planned to sell your property to fund your retirement in the near future, a tax of this nature could dramatically reduce what you net from the sale. Second, for anyone who's not moving anytime soon and not planning to, this type of tax could reduce your incentives to renovate or upgrade your property, especially with investment properties that other people are living in. If you think that the value increase of your property is going to be taxed, why not hold off on spending the money to improve your home? And third, for seniors and people on fixed incomes, a new tax like this could be especially painful. Because even if it's only applied to things like capital gains or increases above a certain threshold, people who own these properties might face large tax bills without the liquidity to pay for them, meaning they might be forced to either take out a loan or forced to sell. So how would something like this affect new buyers? Well, for new buyers, this would likely make entering the housing market even tougher than it already is. You already face down payment challenges, potentially high mortgage rates, and high home prices. Adding an additional tax on top of this all would make things tougher still. One of the truly great things about home ownership is that it builds equity over time, and a tax like this would reduce that upside. This could also impact behavior in the rental markets. As less people buy their own homes and more people are stuck in the rental market, this could push the rental rates higher as it might increase demand for rental housing. On the market side of things, this might reduce turnover. People would potentially hold on to their homes longer rather than sell now and realize the gains, and this would reduce the overall inventory. and that in theory could push prices higher in certain segments or stall mobility for those looking to trade up or downsize. Keep in mind that housing is already a massive factor in the Canadian cost of living, and anything that introduces additional costs, either directly or indirectly, can ripple into housing affordability or even broader economic confidence. So there are several reasons why a lot of us think a home equity tax is a very bad idea. For starters, it undermines the idea that your home is a safe store of wealth. For many people, especially in cities like Calgary, their home is their largest asset. If these types of home equity tax proposals go forward, it shifts what people were assured for their whole lives was untouchable equity into something taxable. Two, it could really discourage home ownership or at least make it a lot more complicated. If people expect to lose a big chunk of the future gains, it might discourage people from buying or investing in any kind of future upgrades to their properties. Three, there's extreme political risk here. This type of proposal is going to be exceptionally undesirable for a large chunk of the population. Imagine if you've lived in your home for 30 plus years, you've paid off most of the mortgage, and now you're relying on the sale of that property to fund your retirement. Being taxed on that gain would feel like having a penalty issued to you for responsible behavior. Finally, in practical terms, implementing a tax system like this would be very complicated. You'd need some way to accurately determine the value of individual homes across entire markets, which doesn't currently exist. Just look at your most recent tax assessment and tell you if you think that value is actually accurate. And you'd have to be very careful about not de-incentivizing home improvements, which this probably would do, because that might end up in slum conditions in certain areas. So honestly, the administrative burden and political backlash to something like this would be enormous. And with that said, I would venture a guess that nothing like this is going to happen in the near future, but that's not to say it couldn't happen somewhere down the road. So where we stand now is that you should probably just keep an eye on these types of proposals as they come up, but I wouldn't stress too hard about it as I suspect it's a long way off. So hopefully you found this video informative, and if you did, please hit like and subscribe, and I will see you in the next one.